Okay, this is a balance day adjustment question. So for these questions, we need to work out our income statements and balance sheet. So for balance day adjustment, we have some adjustment in the questions, and we need to adjust before we start off the question. So for this one, okay, let's look at the adjustment here. So the first one, during the year, the owner took goods cost 3,320 for her own use. So this was not recorded in books. So we have to debit drawings 3,200. We have to credit inventory 320. So for the second one, 1/5 of the loan was due for repayment on 31st October. 1/5 of the loan. So meaning the whole lump sum of the loan is actually 60,000, and because it's going to be paid in less than 1 year, so we're going to move from non-current liabilities to current liabilities. That's why the double entry will be debit. Long-term loan 12,000 is actually calculated from 60,000 multiplied with 1/5. Okay, so you need to credit current portion of long-term loan 12,000. Okay, this is under current liabilities. Okay, third one. No entry has been made for the goods 500 was purchased on credit. So you purchase more inventory, so you have to debit inventory 500. And credit trade payable because it's on credit, it's not paid yet. So VI, next one. Okay, salary was owing. So owing meaning the expenses is meant for this accounting period but was not paid. So debit salary 900. We have to credit accrued salary 900. Next one, V. Rental expense was prepaid. So prepaid is actually paid in advance. So it's not meant for this accounting period expenses. So we need to minus off. So if we minus off for expenses, it will be credit. So debit prepaid rental expense credit rental expense. So VI, commission income was not received. So the commission is earned for this accounting period but was not received. So what we need to do is need to increase your commission income. So you debit accrued commission income 1,200 and you credit commission income 1,200. Okay, so we are done for the double entry for this question. Then let's move on to see before we start what we need to do. Okay, this is the list of items that is meant for the business. That means what they have, what they are owing. So when you are doing for income statement balance sheet, it's better to identify the items that is meant to be in which statements. So for income statement we only identify items that is profits or income and expenses for the business, and the rest of the item that is not expenses and income, it will fall under balance sheet. That's why the B and the I is represent balance sheet and income statement. So let's start. Okay, so let's start with the template. Okay, for income statement and balance sheet, we both need 2 columns. So then you put in the heading first. So income statements for the year ended 31st July 2017. Okay. So now we need to plug in the items in the question. So start with the first item, sales less sales return net sales revenue, okay, less cost of sales and gross profit. Okay, these few items are standard, so it's always fixed in the position. So we have to plug the number from the questions. Okay, so it will be fall under on the right hand side. So 18900. Okay, less sales return. The sales return is 1,800. So minus 1,800. Then cost of sales cost of sales will be 120,980. So this is minus. We'll put a minus sign in front. So you will sum it up. Okay. So the next one is other income, discount receipt. Next one will be commission income. Okay, so there's only two items under income. We will put under the left hand side and subtotal on the right. 780. Commission income is 4,800 plus 1,200. So you will have 6,780. And other expenses. Okay. Other expenses, we only have 4. The first one, discount, allow, advertising expense, salary expense, rental expense. We only have 4. So the first one, discount, allow, there's no adjustment, 630. Advertising, there's no adjustment, 1760. Salary expense is 16,850 plus 900. Rental will be 12,600 minus 2,000. So this will give you 30,000. Okay, so the last step is to find gross profits. So we will sum the 3 items up. Okay, so 42,200 is your profit for the period. Profit for the year. Okay, so we need to draw lines on the respective section. So this one we will draw a line. Okay, draw a line here. Okay, next one is this one. This will be double line. Okay, next we will move on to the balance sheet. So we will draw the balance sheet template as per the income statement, and the heading we will copy from the question. So balance sheet as at 31st July 2017. So for balance sheet we will have a few headings. So the first one we start off is assets, non-current assets. So we will plug we will underline the heading and take out all the items that is meant for non-current assets. Non-current assets definition is items that can be used for more than one accounting period. So motor vehicle is the first one. Okay, next, fixture and fittings. So it's 1700. $16,500. So you do a subtotal on the right. Next one, current assets. Okay, we have trade receivable, cash at bank, inventory, next is just now we have discussed the double entry for some items. So we will have a prepaid rental expense, okay, 2,000, and we have a accrued com income is 1,200. Okay, the first three items will refer to the question. Trade receivable, there's no adjustment, so it's 21,680. Cash at bank, there's no adjustment as well, 7,200. Then inventory, because we have two adjustment on that, so equal 15,500 minus 320 plus 500. So equal sum and we can go and calculate the total assets, which is this plus non-current plus current, which give you 239,260. Okay, so let's standard all the lines first. Okay, once you finish this portion, you have to do the single line on top, double line on bottom. Okay, to close up that we have done for the income statement. Okay, so next we need to move on to equity and liability. Okay, for equity and liability, okay, we need to split into three sections for equity and liability. So equity and liability. So we start off with equity. So capital, add profit for the year, less drawings. Okay, this three item is fixed for all balance sheet for the sole proprietor questions. So capital is 120,000. Profit for the year we will take from your income statement, less your drawings. Drawings we have one adjustment, so it's 2,400 plus 320. So this is a minus. Okay, so we are done for your equity portion. Then next we go to the non-current liabilities. So this is long-term loan. Long-term loan, we actually have a adjustment for 1/5 of the portions will be repayable in October, so we will minus that out because that one will fall under current liability. So this is trade payable. Okay, then don't forget we have some adjustment that we have done just now, which is the accrued salary, meaning next, because it's still not paid, so the next following accounting period you need to pay this portion. And a current portion of long-term loan. So this is 912,000. So we need to get the trade payable. There is one adjustment. Trade payable 18,320 plus 500. 18,000 plus 500. Okay, so you sum it up. Okay, so now we are at the final stage of checking to ensure that your balance sheet is correct. So we need to add this equity and liability section together, and if the equity and liability portion is the same balance as total assets, then the question is more likely to be correct. Liability. Okay, so this is the end of this question.